So you want to improve your credit score. Maybe you are applying for a loan or a credit card soon, or you saw your score and you're like, I can do better than this. Well, in this video, I want to walk you through exactly how to improve your credit score in Canada. And we're going to do it in two parts. First, I'm going to give you the biggest tip that I have. And then I'm going to walk you through the different parts of a credit score. So the factors that are used to calculate it. And for each factor, I'm going to share my tips, my advice on how to improve your score by making better financial decisions. And I really think this is the best way to do it. Don't trust people that tell you you can increase your score by hundreds of points in a day. That really isn't how it works. It's something you work to improve over time, but there's room for improvement with simple tips. It really isn't that complicated. The first big tip is to pay for things with your credit card, not your debit card. And if you don't have one, get one. Here's the thing, even if you have the money to pay for things, which is great, that really is how you should be spending, paying for them with a debit card doesn't record any transaction with regards to your credit score. Credit scores are only interested in things that are related to credit, like a credit card. And so if you are paying for things regularly with a debit card, I highly recommend you switch to paying them with a credit card and just pay the credit card bill on time every month with whatever transactions you've had. And that way you're still spending the same amount of money, it's still the same transactions that you're making, but they are counting for your credit score. And if you pay them on time, then you're set up and you're improving your score with literally every coffee, every grocery trip, anything you get with your credit card. It's the easiest way to show that you are responsible with credit. There are some extra perks. You might get cashback or points, rewards when you use your credit card, which you might not get with a debit card. And sometimes you'll get insurance on rental cars, you'll get extended warranties on phones. There's benefits to using a credit card. So now let's get into more detailed tips to improve your credit score. And so the way I'm gonna structure this is I'm gonna explain to you the different factors that go into calculating a credit score. And for each factor, I'm gonna give you some tips and advice on how it works and how you can make smarter financial decisions to improve your credit score within that factor. The first factor that's the biggest one in a credit score is your payment history. So that means, have you paid bills like credit card bills, hydro bills, phone bills, or loan payments on time, or are you late or have you missed payments? And so for this one, it's pretty straightforward. You want to pay everything on time and you want to miss as little as possible with all of your credit that you have. So if you have a credit card, what I recommend and what I have set up myself is automatic payments. So if you have the money in your checking account, well, every month your bank will take that money out of the checking account and pay the credit card bill, either the total amount or the minimum payment automatically. It's the easiest way to avoid late or missed payments, and I highly recommend it. Next, and this is one that people don't really think about, credit utilization. So credit utilization is how much credit you're using versus how much credit you have available. So let's say your credit card has a $1,000 credit limit. Well, if you're paying $100 with it every month, then you're using 10% of your available credit and your credit utilization is 10%. The recommended credit utilization amount is less than 30%. So if you have a $1,000 credit card limit, you should ideally be using less than 30% of it every month, and that's $300. So if you have spending that goes over 30% of what your credit limits are, for example, I highly recommend you ask for a higher credit limit from your bank or your credit card company, because that is a great step to reducing your credit utilization. As long as you're not overspending and using whatever extra limit they're giving you, you're just reducing your utilization by increasing your credit limit. Next, the length of your credit history. So in Canada, if you've had credit cards for a long time, or you've been paying a mortgage for a really, really long time, for example, your credit score is going to be higher because there's more proof or more history to prove that you've been responsible with credit in your credit score, because that's what the credit score does. It looks at your history with payments. And just like a resume or a CV is more impressive if there's more years of experience, and that makes employers trust you more, it's kind of the same with the credit score. If there's more years of experience paying down credit cards or paying down a mortgage, lenders are going to trust that you will do that more. Just make sure you don't close old accounts that you've had. So for example, if you have a line of credit that you've had for many years and you're just not using it anymore, well, do not close it unless there's fees, right? So if it's free to keep, by all means, keep it open. It's just proof that you've had credit for a longer time. Same for credit cards. If you have an old credit card that you don't use anymore, but there's no annual fees to keep it open, I highly recommend you keep it open because the years count for your credit score and help increase the length of your credit history. So this is something I've actually faced. I have maybe 2 cards that I never use, but I've kept them open because they don't cost me anything every year, but I keep them open because I want the years that they've been existing to count for the length of my credit history. All right, next is the type of credit that you have or your credit mix. This isn't super important, but it's good to keep in mind. If you have larger purchases that you're making, it might be interesting to look into non-credit card options like a line of credit or other types of loans. It does seem like credit bureaus favor people with diverse types of credit. It's not really a huge factor, but it's worth mentioning. For example, I had a student loan at some point in addition to my credit card, and so that meant that my credit mix was a bit more diverse than someone who only had a credit card. All right, last but definitely not least, it doesn't count for much, but it's still a factor, inquiries. Inquiries are when someone checks your credit score. So if you go to a new bank to open a bank account, sometimes they'll check it. If you're applying for a new loan or a new credit card, they most definitely will check it. And for inquiries, there's really 2 types of inquiries. There's hard checks and soft checks. Soft checks are the ones that don't really count for your credit score. For example, when you check your credit score online, that doesn't count. It's a soft check. It won't affect your score at all, and you can do it as many times as you want. But hard checks affect your score a bit negatively. It depends how many you have. So let's say you're applying for a new credit card and you're looking at different options of credit cards. Don't just apply to every single one and see what you get, because they're gonna run a hard check every time you apply. What I recommend is try to identify the ones where you looked at the eligibility requirements and you are eligible and you're sure that you want them. Well, only then would you apply, and then you would be fine with a hard check because it has to happen anyway at some point. But don't go around doing a bunch of hard checks for no reason. For example, I had to open a bank account recently, and if I opened it online, they were gonna do a hard check of my credit score. But there was the option to go in person to open it, and apparently they didn't need to do a check in person. You can imagine that I walked into the branch to open it in person because that avoided me a hard credit score check. There is apparently an exception where if you're shopping around for mortgages, for example, within 2 or 3 weeks, all the checks that are run on you don't count separately. So if you're shopping around for a mortgage, try to keep your credit checks within 2 to 3 weeks. And so that really sums it up. To improve your credit score in Canada, use a credit card for payments. It's the easiest way to contribute to improving your credit score. Instead of a debit card, don't overspend. Just do it in a way that builds your credit. Try to keep old accounts open if they don't cost you in annual fees so that you can keep your credit history longer and existing. Keep your credit utilization under 30%, so don't use more than 30% of the limits or the credit you have available. And try to avoid hard credit checks if you don't need to have them done. That's general advice that will get you set up. I really wish you the best of luck and have a great rest of your day.